Okay, everybody, what's up? Mokama Sunday service, teaching you how to make it rain without the umbrella. My new sign on. Um,
Thank you.
Today, we're going to be talking about like the top five market sentiment indicators or gauges. Once again, this is for informational purposes only. Trading is risky. I am not a financial professional. You should direct any and all of your trades and investments to your financial professionals and do your own research. Once again, this is for informational purposes only. All right. All right. So today, the main thing I wanted to talk to you about is market sentiment. And what I mean by market sentiment is like if you enter into a trade, how likely is it to keep going up or keep going down? Right. So, and Isaac, you've been trading a lot lately. So I think this is extremely important for like determining whether or not there's likely going to be follow through. Right. So when we were talking about HubSpot, like, should this be a little quick snipe? Should this be a longer swing trade, or maybe this should be an investment? You should try and figure that out before you enter the trade. But specifically, like, how do you determine whether or not, hey, this thing, let's say it hits a level of support. Is it likely, or do you believe that it's likely that it's going to hit this level of support and then turn around and go to the other direction? And then is it going to blast off in the other direction, or is it likely to kind of linger or hover around and not really do much, or pop up a little bit and maybe you should kind of, do a quick hit on it? So let me share my Thinkorswim with you. Can you see my screen?
Yes, sir.
All right. So number one, uh, what does the index look like for that stock or ETF? So we were talking about HubSpot, but let's take like Apple, right? Just because that's always, the stock that everyone's looking at. Or let's do Google since we always look at Apple, right? So this is what Google looks like currently. Let me get a new chart. Here's Google's chart currently. Google this week hit another all-time high. So for me, Google is a tech stock. Not for me. Google is a tech stock, right? I don't think anyone can argue that Google isn't a tech stock. So when you're looking at market sentiment, the first thing that I want to know is what the index is doing. What index is Google most tied to? And there's four major indexes. So as you see here, how I set my charts up, right? The major indexes are going to be the Dow or YM, and I track the futures because they're open usually like 23 hours a day. So you can always kind of see what that index is doing. And by index, I mean like these are like the big oceans. So imagine like the Pacific Ocean, the Atlantic Ocean, the Indian Ocean, right? Those are the major bodies of water. So the Dow is kind of like that. The S&P 500 or the ES is like that. The NQ or the Nasdaq is like that, and the Russell, the RTY, right? So the Dow is primarily going to be energy stocks, financial stocks, healthcare stocks, and industrial stocks. Those are the primary levers of the Dow. Inside of the NASDAQ, you're going to have mostly tech, right? So if tech is going higher that day, the NASDAQ is going to be headed higher. So the NASDAQ has other things in it as well, but it's primarily a tech index. So when we're talking about Google specifically, the index that Google is likely to follow the most, or the ocean that Google is going to be in, is going to be the Nasdaq. You also got the S&P 500 or the ES, which is going to be some tech mixed with like some energy and standard stocks, right? It's not going to be all tech, but you're going to see that this thing is going to be pulled by the Dow and going to be pulled by the Nasdaq. So if you see the Nasdaq, or I'm sorry, you see the Nasdaq and you see the Dow up that day, chances are the ES is going to be up. Or how you see here, the Dow is down and the Nasdaq is down. What else is down? The ES is down. So the ES is not extremely independent. It tends to get pulled by the Dow and the Nasdaq. So if you want to see clarity on the S&P 500 index, you ideally want to see the Nasdaq and the Dow going in the same direction, whether that's up or down, and that's likely going to give you more clarity on what the ES is doing. And then the last one is the Russell. That's the small caps, the regional banks. So the Russell is just kind of like the smaller weighted stocks in the stock market. And so those are your like four major oceans, right? So when you want to take Google to the upside, let's say you're trading Google, you're day trading Google, Isaac. If you think Google is getting ready to reverse and head back up, it would be great if you saw the NQ or the NASDAQ and SPY up as well, but mostly the NQ because that's the index that it's going to be tied to. Even if you start seeing the NQ bounce, right here you see it's minus 0.36%. If you start seeing NQ going up, there's probably a better chance that Google trade, if you're betting on Google to reverse and go to the upside, if it's going with NQ, you're going to have a better chance of follow through because the ocean is headed in that direction. If NQ is going down and you're trying to trade Google to the upside, Google's going to have to fight a whole lot harder to go up because the ocean's going to be going in the opposite direction. That doesn't mean that Google can't go up, but the likelihood that Google is going to continue in that direction when the ocean is headed against it is, there's just lesser probability, and that's what we're doing is gauging probabilities of things likely to happen. So when we're talking about the index, like that's what I mean by like sentiment. If the ocean, like if all of these things are up, if the Dow is up, if the S&P 500 is up, if the Nasdaq is up, and the Russell are up, you probably shouldn't be shorting stocks that day, right? Does that make sense?
Yes, sir.
Right. Even if it looks like a setup where it's like, oh my God, this hit a level of exhaustion to the upside. I think it doesn't have any more in it. You might want to be careful on that day if the entire market is up, or specifically the index that your stock is that you're trading or your ETF is heavily trading. If it's going in the opposite direction, you better keep a close stop on it, or your target should be a shorter target, because the chance that that's likely to follow through and go to the moon when the entire index is headed the other direction is it's a low probability trade. That's not to say it won't work, but it is a low probability trade. So that's the number one like sentiment reader, at least for me in the morning. I wake up and I'm like, what are the indexes doing? Are the indexes up? The first 15, 20, 30 minutes, are they staying up? Are they reversing? Are they going back down? And then that's going to determine what I trade. So like, for instance, if let's say the NASDAQ, and here, look, the NASDAQ is the weakest, right, of the indexes right here, of the main four indexes that I track. I also got some other futures on here as well, like bonds and natural gas and crude. But when we're talking about the major indexes, NASDAQ is the lowest right now. So if everything is red that day, hypothetically speaking, and the NASDAQ is the weakest, I'm probably going to be looking to short things that day, specifically for day trades. We're not talking about longer swings or longer investments. But specifically for that day, I'm probably going to be looking to short the weakest index. And then, in order to find out or figure out what I'm going to short, if I'm not going to short the index itself, I'm going to go look at stocks within that index that are weak as well. And that's likely how I'm going to find a trade to make if it seems that all of the indexes are headed down that day, right? Because I want to go look in this ocean that I know is headed down and then go figure out what's the worst stock in that ocean or what's the worst ETF in that ocean, right? So that's number one.
It's like we're going with the flow of the traffic kind of thing, but with the market this time.
Exactly. Like even if you think about like you're swimming, right? If you're swimming in the ocean, you want to swim with the current. If you're swimming against the current, yeah, if you're a strong swimmer, you can get there, but I wouldn't advise you to do that. You're going to be tired, right? You're more
Right,
like
right.
go with the flow. So it's just one of the things where you can kind of figure out if the setup that you're taking is it going to be a high quality setup, right? If you're trading Apple, you told me you took a trade on Apple to the upside last week. Apple is tied heavily to the NASDAQ and to the ES, right? So if you see the NASDAQ and the ES up and they're headed up, I'm going to be more likely to take that Apple trade up to the upside, right? If the NASDAQ and the ES are headed down, and actually, there was something weird last week where the Apple wasn't so tethered to the index like it usually is, but it's just going to have to work a lot less hard if the Nasdaq is headed up. All of the other tech stocks are headed up. Apple's going to have an easier time heading to the upside, right? So then number two, after the index, the other sentiment is going to be the sector, right? So let's talk about SMH because SMH is in the Nasdaq. SMH is going to be in the NQ. Where is it at? And as you see on my watch list, this is how I build my watch list. Can you see my chart right here?
Yes, sir.
I have these watch lists right here, specifically the indexes for me, and the ETFs usually stay up because I want to see what the ocean looks like, right? And then think of the ETFs as like currents within the ocean. Right. So each ocean is this body of water that's probably headed a particular direction. And then the ETF for the ocean are like different currents within that ocean. So with the NASDAQ, SMH chips is tech. So that's going to be a huge component of the NASDAQ. However, SMH, which is mostly the chip ETF, is going to perform way different than XLK, which is a purely tech index that's not as heavily weighted in the chips. And as you'll see right here on Friday, you'll see there's some divergence. Even though SMH was up 0.71%, XLK, which is the tech index, was down 0.05%, even though they are both heavily weighted in the NASDAQs because chips, there's a lot of chip stocks in the NASDAQ and there are a lot of tech stocks in the NASDAQ, right? So here's where you see a sector. So let's say if I was trading NVIDIA, right? If I was trading NVIDIA, I ideally want to see the ocean. I want to see NASDAQ up. Let's say if I'm trading NVIDIA to the upside, I want to see the NASDAQ up. I also am going to want to see SMH up. That's like the current within the ocean. So if I got the ocean going with me, I got the current in the ocean going with me, right? I'm more likely going to want to take NVIDIA to the upside and think it has more follow through because the ocean's up and the current is heading in my direction too. So that's like the sector. So that's the second sentiment reading. And so if we go back to Google, Google is most heavily weighted in NQ, and it's also considered a communication stock. It's in XLC, right? So if I see NQ down and I see XLC down, I'm not going to want to take Google to the upside that day. Right? You feel me?
Yeah.
And then this is also because like Google, and I think I showed you this last week. Google's heavily weighted in XLC with Meta, Google, and what's the other? There's one or two other major weights in the in XLC, but this because it's so heavily weighted that if you see XLC down, it's going to drag Google, Meta down as well. Disney, I think it's T-Mobile, AT&T, communication stocks, right? So you're going to want to see, even if this, let's say, is 0.91%, if you start seeing it go up to 0.75%, to 0.5%, to 0.25%, that's going to give me more confidence that the whole sector is turning around, which means Google is likely to turn around too. Right. So not just looking at how much is down for the day, but how is it moving in that instance when you're trying to take that Google trade? Is XLC bouncing when you're expecting Google to bounce? Well, then that's gonna do better for Google, right? If XLC and the Nasdaq are both bouncing, crazy how this changed that fast. Did you see that? Nasdaq right here.
Yeah, I saw that.
But so if the NASDAQ, and this is a good example, if the NASDAQ starts bouncing and you see XLC bouncing at the same time, so it goes from 0.96 to 0.91%, Google is going to have a better chance of bouncing too because now the tide and the current are switching in the other direction. So that's just kind of what you want to see if you're expecting Google to have follow through. So if you see Google bouncing, but XLC is still down or going down, Google probably is going to have to fight a lot harder to keep going up if its whole sector is going down. So you should have lower expectations for follow through, or you should have a shorter target, or maybe you shouldn't take that trade at all because you're going against the current or the tide, right? So that's the ETF, and you kind of got to understand how these stocks are weighted in different ETFs, that the major ETFs in the market. So I know same thing for Apple. Apple is going to be heavily weighted in XLK, and Apple is going to be heavily weighted in SPY, which is essentially the ETF that tracks the ES, and it's going to be heavily weighted in QQQ. So what I would like to see on a day that I'm taking Apple up, I want to see the SPY up, or ES, which is the S&P futures. I want to see the NASDAQ up, or the NQ, the NASDAQ futures. And I would also love to see QQQ up. I would love to see SPY up, and XLK, wherever that is, right there. If I see those ETFs up and I see the indexes up, then I'm going to be more confident taking Apple to the upside. If I see all of those indexes and ETFs down, I'm going to be more likely to short Apple on that particular day, because that's what the sentiment is telling me in the market, is that, hey, the entire index is down, or the entire index is up, or the entire sector is down, or the entire sector is up, right?
Right.
So just understanding how each particular stock ties into into a sector or index can help you to figure out what the tide is doing at that particular time. And just to give you more confidence in your trade, you know, if you see the Qs going to the moon, hey, Apple and Microsoft are probably doing really well because they're heavily weighted in the Qs, you know. If you see XLK going to the moon, hey, Apple and Microsoft are probably doing really well because they're heavily weighted, especially in XLK. They're extremely heavily weighted. So chances are those two stocks are going to be doing well, if not one doing even and one blasting off. But it's just going to give me more confidence in my trade if the sector is headed in the same exact direction. All right. Number three, in terms of market sentiment gauges, are we in a bull market or a bear market? So, like, right, just zoom out a little bit, right? If you go to the S&P 500, the futures, go to you could even do a year time frame or whatever, right? Are we in a this is the entire market, right? The top 500 stocks in the market that represent the market. The S&P ES is more broad. You see here the index features here. But are we in a bull market? It looks like it because we're headed up, right? If you just zoom
Yeah,
out,
it's a trend.
if you just zoom out and just look at where we are, like we're trending upward. And for me, like one of the best indicators that we're in a bull market is that the lower moving averages are on top of the higher moving averages. So if you've been here before, you know how I set up my charts. This is a 200-day exponential moving average. This is a 50-day exponential moving average. This is a 34-day exponential moving average, and this is a 21-day exponential moving average. So the fact that the 21 is on top of the 34, which is on top of the 50, which is on top of the 200, is a really good indication that we are still in a bull market because things are still heading up. Even if we have these pullbacks like this here, the fact that these moving averages are still trending upwards are good indications that we're in a bull market. So if we are in a bull market, you shouldn't be shorting a whole bunch of things. You should be looking at things that are pulling back and trending upwards because we are still in a bull market. So I'm not saying don't short anything. I'm saying the vast majority of your trades right now should be to the upside because that's where the trend is right now. Now, if you were back here, when did we go into a bear? What is this? Right around here. What year was this? Let me change to a month chart. It's actually harder to see on a month chart. So if we go back to a day right here, this period. So as you see here, I can't tell exactly when this was. It looks like sometime in the end, what was it, 2022? If this was 2023, yeah, it was sometime in 2022. When we're in 2022, you see all of these moving averages, the lower ones crossing the 200, especially when the 50 crosses the 200 is more of a lagging indicator, but that's what they call the death cross, which is an indication that we are heading into a bear market. So in this particular period from here to, looks like most of this time right here, now you see the higher moving average, the 200, is above these lower moving average, which means we have negative sentiment. So if I'm trading in this environment through this period, I'm going to be shorting things more than I'm going to be taking them long because the overall sentiment of the entire stock market is negative. So if the entire stock market sentiment is negative, I'm going to be looking for trades more to short, to be on the downside. I'm going to be buying puts, or I'm going to be selling call spreads because the market is telling me that, hey, we're in negative sentiment territory, so things are likely going to keep heading lower. So if things are going to likely keep heading lower, most of my trades are going to be to the short side. So that's what I would just say right now. We are in an environment right here pretty much since, looks like for about 6 months to a year now, we have been in a bull market. So since we're in a bull market, we shouldn't be looking to short too many things. Now, there may be some individual sectors that we short from time to time that are going down and that are extremely weak, but you should be looking for strength in a bull market to keep continuing rather than looking for weakness. And then when we're in a bear market, conversely, you should be looking for weakness more than you're looking for things that are strong, because that's kind of like an ocean tide thing as well. If the entire stock market is going up, chances are the stock, no matter what you're buying, is more likely to go up because that's the environment that we're in. If the entire stock market is going down, I don't care what stock you buy. Chances are most things are going to go down because the entire stock market is going down. It's the ocean is headed in another direction. So just looking at your sentiment. So we shouldn't be really looking for a ton of short positions when, if you look here, it looks like we're still trending upwards and we're still in a bull market, right? We're nowhere near our 200 exponential moving average on the S&P 500. So, and we're nowhere near this 50 crossing below this 200 exponential moving average. So, look for more long trades than you're looking for short trades right now, right? So, that's just bull market, bear market sentiment, right? Okay, so now looking for individual stocks. So let's zoom in. Let's go to Google. Let's do a 5 minute chart. All right. I assume you're using a 5 minute chart mostly when you're doing your day trading, Isaac.
I go in and out. I do a 3 month, I do a month, I do a 5 day. I just want to see kind of all the trends of it. And but yeah,
Got it.
definitely looking at a day trade too.
Got it. When I'm so even if I'm day trading, generally I'm going to zoom out first. I'm going to look at monthly levels, weekly levels, daily levels, that sort of thing. But typically, when I'm entering a trade, I'm going to zoom into the 5 minute chart to see if it looks like something is exhausted or if it could keep going down, that sort of thing. But an indicator that is really a really good indicator to see for that particular day if something is likely going to keep going up is whether or not we are above the prior session close. So if you go to a day chart, we zoom in here, right? So this was from Friday. So if we're talking about Monday, right, the closing price on Friday was $182.15, right? So if you draw that on your chart, hold on. Let's say 182.15. Okay, right? So, and actually, let me name that PSC or for previous session close. And then we zoom in on a chart on a 5 minute, right? So imagine, so this is aftermarket trading, right? Aftermarket, pre-market trading because the regular session of the market isn't open, right? You see this shaded area right here?
Yeah,
So this is regular session that's not traded. So, um, damn, actually, I should have bought Google too on Friday right there. Because I bought Amazon and the Qs on Friday. Here, so if we go into Monday and this stock stays above this PSC or the previous session close, I am more likely to take things to the long side that day if I see the price staying above the close from the day before. So that's why I said this is the fourth sentiment reading. I went broad first. Now I'm kind of going more granular, right? On a particular symbol. Let's say you decided, hey, I like Google. It looks exhausted. I've been doing my charting. It tends to pop right here. I want to hop in right here. So you should also look at, hey, especially in the morning, because usually if I'm trading, I'm going to be trading in what? So we're here. I have this set up on Pacific Standard Time. So generally, if I'm day trading, I'm not going to trade after 7:30. So the action that I'm probably going to see is going to be this candle all the way over to like this candle right here. Maybe I might go an extra 5 minutes, but generally I'm done day trading by 7:30. I might swing trade after that, meaning positions I'm going to hold open for a few days to a couple of weeks, 3 weeks, that sort of thing. But my day trading, meaning I'm going to close the position before the end of today, I'm usually doing that within the first hour of the market. At least I'm entering a trade. I've been thinking about starting to do that at the last hour of the market too, because I've been seeing that there's a lot of alpha in the last hour as well. from like 12 to 1, or East Coast from 3 to 4 p.m. Right? So, and you'll see, look, at these big movements have happened in the first hour and that last hour right there. So that's when you're going to see a lot of the most alpha. But I'm really looking like, hey, if Google is above the prior day's close, which I outline on my chart here, you could also either go buy an indicator. Through my class, we have an indicator that the previous session closed, where if I put that on my chart, wait, why is that there? Oh, it's because the new date hasn't set. Wait, or did I get the previous session closed wrong? Let me double check that. See, the close was 182.15. The close here was 185.41. Anyway, this indicator, it's probably because it's the weekend. Yes, because I'm seeing this yellow line is down here now. All right. But you can get an indicator. Essentially, the prior session closed for Monday. I think this is taking it from the day before. The prior session closed on Monday. If you don't have an indicator like the one I have here, is going to be 182.15. So you're going to see this yellow line right here is probably going to move down to here on Monday because that was the close from Friday. But that's what you're looking for. It's like sentiment. So if you look at this day before here, the previous session closed here, your best bet on this day to have some follow through, especially if you're trading in the first hour or so, is to take things to the long side because Google stayed above its prior session close this entire day. So as you see, we pulled back, but everything kind of stayed up, pulled back, but everything kind of went up again. It's just kind of another sentiment read for follow through. If you're above the previous session close, you're more likely going to be able to follow through. Now, what I do want to do is go find something that did terrible on Friday. That was
Quick question.
Yeah.
So how do you know? Because you know how like that first hour is the markets usually might be either up or down depending on where the market's at, and it's gonna spike for a quick 30 minutes either way. Now, when you're doing this charting, you're saying the 5 minute. How long are you basing that? Are you basing that off of that just that 5 minutes that you're gonna go into that trade? If it's because say within the next hour, it might spike down and go under that closing day trade.
If I'm day trading, I'm usually using a 5 minute. I'm using a 5 minute chart because this is sentiment like because I don't plan on being in this trade for longer than a day. So I'm looking at 5 minute increments. And then
Okay.
generally I'm not trading in the first 3 bars, right? The first 15 minutes is usually the most volatility before the market usually finds like which direction it's going to go. Here's a perfect example here.
Okay, that's what I wanted to hear.
Here's the
Yeah.
perfect example here. Meta, first bar goes down, right? Huge bar down. Then a green bar, then a green bar, and then it finally decides it wants to start kind of going up a little bit. So, and then even so, I wouldn't have taken this trade up because we were below the prior session close. And as you see, as soon as we got close to it, it came back down. So it's just a sentiment read. We got above it a little bit, but then came right back below it. If we are below the prior session close, I am more likely to short a stock. But I'm not going to take it long. Even though this, if I would have got out at the right time, would have probably made me some decent money from 513 up to 521. If I was taking a spread, that would have done really well for me. But I wouldn't have taken this trade because we were below the prior session close. So the probability for follow through was really low, right? It did follow through a little bit, but it didn't keep going. Right, it came right back down as soon as we got close to this prior session close and then came back. But I'm not going to take this trade to the upside. What I would prefer would be to take this to the downside once we hit this prior session close. So chances are, if I would have saw this, the trade that I would have taken, I wouldn't have taken it right here. What I would have done is I probably would have entered the trade right around here, but I would have shorted it with a stop that's up here, and then hopefully I didn't get stopped out. And then look at this follow through going down. And why was the follow through better to the downside? Because we were below the prior session close. You feel that?
Yeah, I got that.
Taking this trade right here, it would have been a great scalp short target, but taking it right here, there was more follow through because we were below this area, right? So, like, there's just way more follow through to the downside because of what the sentiment was on this particular stock. So that's why I'm saying that's like number 4. Prior session close, where is it? Where did it close? If we're trading above where the stock closed the day before, there's more chance it's likely going to keep going up. If we're trading below where we closed the day before, there's a better chance the stock is going to go down. So even though we had a point of exhaustion here that looked good, I likely wouldn't have taken this day trade because we were below this level. Now, if this would have happened right here, then I would have taken this to the upside. So that's another really good sentiment reading. Where did we close the day before? And are we above it or are we below it? If we're below it, then short it. If we're above it, it's a better chance for follow through if you take it long. But this is also in addition to what the other cylinders are doing. What's the index doing? What's the ETF doing? Are we in a bull market? Are we in a bear market? And then for that individual stock, is it above where it was, where it closed the day before, or is it below where we closed? If it's below where we closed, it's more likely to head down more smoothly. If it's above where we closed, it's more likely to head up more smoothly, right? So I know I went granular with this one. I probably should have ended with this one, but the 5th thing for a particular stock is it trending? Right? Go to the day chart. Is it in an uptrend overall, right? So Meta, at least in its current trend, like after this big drop right now, it looks like it's trending upward, right? If you look at the moving averages, they're going up. They're going up. Now they're leveling out a little bit, but they're up. So right now, Meta's trend appears to be up. So I'm likely, specifically, not necessarily for day trading, but for swing trading, which means I'm holding the trade longer than a day. I'm looking for a pullback on something like Meta, which we had on Friday. But I'm likely going to take this up rather than short Meta for a swing trade because the trend that we've been in over the last couple of months has been up. So I don't want to go against the trend. I want to go with the trend. So if I'm going with the trend, specifically for a swing, not even long-term investments because I have a different strategy for that where I usually want to catch it at the 200. But for something longer than a day trade and shorter than like a standard investment time frame of a year to 5 years or 10 years, like that's what I'm looking for. Is this thing trending the right way? If it's trending the right way, if it's trending upwards, I am less likely going to want to short this thing, even if it's going down on that particular day. Or if I am shorting it, I'm not going to be expecting as much follow through because the trend on this right now is up. Even though we had one down candle, the trend is up. It's looking like it's getting close to an all-time high again, right? Which is 531.49. So since we're trending upward, I'm less likely going to short a really strong stock. The things that I would like to short would be the weak stocks, like a Boeing, right? Boeing, even recently, Boeing has been more so sideways. Can I find a better example? What about KRE? Nope, KRE is kind of sideways. What fell? Oh, Disney.
I was about to say that too.
Right? Look at Disney over the last few months. It's going down, right? So right now, from a day trade swinging standpoint, I'm more likely to short Disney, especially after this candle here. It was consolidating, which is why I wanted to grab it for a long-term investment. And then after this one candle, we broke these lows. What I hate is new lows or a lower low, which is what we had on Friday, which is why I got out of my Disney long-term trade. I could be wrong, but I'm more likely to short Disney if it gets back to this 200 level because it's been trending the wrong way. It is kind of sideways. This isn't, I wish I could find a better example of something that's been going like Unity. Let's go. There we go. Let's look at Unity, right? That's a clear downtrend. There's no sideways action in this. It's just, we just keep going down on Unity, right? So here we have a clear downtrend. So this is something where I'm like, I'm looking at the trend. I don't care if it has one of these pops on this day or this day. I'm not going to be taking Unity to the upside. I'm going to be waiting for Unity to pop up and then short it on the way down, because look at the general trend of Unity over the last few months. The general trend of Unity over the last few months is to go down. So it's likely going to keep going downward until it's so extremely exhausted. But just in terms of market sentiment, in terms of probability of follow through, if you're taking Unity to the upside, you're going to have a less chance of the follow through going upwards, because like it just looks like the trend is to continue heading down. So you're going to really need to see some consolidation. You are kind of seeing that here over the last few days, but ideally you want to see it like we saw it on Dash, which is why I entered, right? This is consolidation. So usually after consolidation, it's going to shoot up or down, and we're kind of betting that this is exhausted and it's going to shoot up. But you want to see more consolidation rather than a consistent downtrend. I would say here the trend is neutral because it's been going sideways for a long period of time, right? But that's what I'm talking about, though. It's like, don't short. I know everybody's trying to call a top on NVIDIA, but if you look at the long-term trend, NVIDIA looks like it's still headed up, because look at the moving averages. They're still headed up. It's pulled back a little bit, but am I itching to short NVIDIA? Absolutely not. I would rather try to catch NVIDIA on a pullback. Like, remember that day that I entered the trade? It was this day. It stopped me out for like almost nothing, so I pretty much broke even. But if I would have kept my stop, NVIDIA did pop off that level that day. But it's more likely
What price target was that? Like 123?
I think it was like 120. It popped up for a minute, and then that would have been a great trade for me. I would have got out like probably on this day, scaled out a half or whatever, and got out of my trade. And probably would have still been holding on to the rest of my position right around here. But that's all I'm saying is don't short strong things, and don't take weak things long, specifically for like day trades and swing trades. You want to be like with the trend. So NVIDIA might have had a 2 or 3 day pullback, but if you zoom out, the trend is really strong. So the sentiment of NVIDIA over the last couple of months is strength. So I'm going to be less likely to short NVIDIA even if it reaches a peak like this. And then if I do short it, I'm not going to be holding on to that short for like a week or two. I'm probably going to get rid of that short and have a shorter target, because I just don't want to be shorting things that are extremely strong. Ideally, I want to be shorting things that are relatively weak, and try to find the weakness. The only thing that might change my calculus on NVIDIA in terms of shorting something that's this strong is if the NASDAQ is down that day, SMH is down that day, XLK is down that day, and then I see all of the chip stocks down that day. Even though NVIDIA is strong, that might be a situation where I still short it, because the tide and the ocean are headed in that direction too. But still, I'm not going to be shorting NVIDIA for a long period of time, even if the tide and ocean for that day are headed in the same direction, because overall NVIDIA has been showing extreme strength. So I'm not going to be shorting things for a long period of time that are showing extreme strength, right? So those are like the 5 market sentiment readings that for me in day trading, swing trading, those are the things that I'm really looking for to figure out, hey, is there a good chance that this stock, is this instrument, is this ETF likely going to have some follow through? Is those are the 5 things that I'm looking at. And then, we've been talking about, just to kind of go on a tangent, HubSpot, which is a trade we entered last week. If you look at it, it's consolidating a little bit. Even here, like it's bearish, but it's consolidated, right? It stopped dropping from way up here, right? It came down, and then it looks like here it consolidated a little bit, right? So given that it's consolidated a little bit, let me take some of these studies off the chart, especially this PSC line, right? It started consolidating a little bit. It hit this low, and then I see we're near our 200. And usually I like to catch things around their 200. Sometimes they might dip a little bit below it, but these tend to be good places to kind of enter a trade. And what's crazy is I don't know if I entered it in this day or I feel like I entered the trade on this day. I think it was this day on 6/26. It was one of these days, right? So
I'll say the other one.
it was
When you told me, I was already in and out, and then I saw a couple more days after that. So yeah, I was gonna say the what day was that? The 24th, maybe
the 21st.
21st. Yeah, I would say that's the day you
Okay.
entered that trade.
So that was the day I entered. I always like these long wicks too, right? A long wick off a candle meaning it hit this price and then a lot of people bought it up, right? Really quickly. It didn't stay down there that long. But, I was watching this at the 200 and I saw we got a lower low right here. We got another lower low and it was right there at the 200. So I was like, you know what? I'll take a flyer on this. What I also liked about it was like its high on this day was 693 and then it came down to like 550. Oh, that's probably another reason why I liked it as well. 550 is a nice whole number that things tend to bounce around there. So like I was like, hey, if this thing is going to bounce, it'll probably bounce at like 550. It's already down 20%. It's a tech company that's already down 20% in a bull market where tech has been doing great. So I was like, if anything is likely to bounce, it's probably going to be this tech CRM stock that's doing a lot of stuff with AI right now. And then let me go to earnings, Hubs, earnings. Right? The operating income, like it's still trying to find its footing to make money. But look at what it's done the last 4 earnings periods. It beat on its earnings per share and revenue, beat on its earnings per share and revenue, beat on its earnings per share and revenue, beat on its earnings per share and revenue. It's always outperforming its expectations. The revenue is up and it's only at 617 million, which means that it's only making a couple $1 billion a year. So for me, I think HubSpot has a tremendous opportunity for growth versus CRM, which is more of a grown company. So if something is likely to boost off and start, like if it doubles its client base, HubSpot still wouldn't be anywhere near CRM's earnings, but it has more space to grow than CRM does. So like generally I liked its fundamentals too, and it's been beating its revenue and earnings expectations and it continues to grow. So when I'm taking anything long term, that's what I'm looking at. I'm looking for, is it discounted? We've already seen, let me go back to Thinkorswim. We've already seen on HubSpot that it's discounted, right? Looking at the fib levels, if we go to a 5-year month chart, and the high was 866, where we grabbed it, it was about 45% off, so it's discounted. Not only that, off a recent high, it was 20% down from a recent high, which is a significant correction on any stock. Like if the market went down 20%, everyone would be screaming and yelling, right? So the fact that this stock dropped 20%, and look at the trend. So we kind of still using the sentiment gauges. Look at the trend. The trend has been up from this bottom right here where it leveled out and consolidated. The trend has been up. Be something that's going to continue going upward while we're still in this bull market and we're in a presidential cycle too. So these were the reasons why I bought shares of HubSpot on that particular day and why I'm holding them long term. The sentiment looks good. I got it at a discount, right? If I'm looking at it, how I got it at a 45% discount. The sentiment looks good. It's in a sector that I think is going to keep growing. It's in ETFs that have been trending upwards. So I liked HubSpot, and that's why I was tracking it. All right.
Nice.
Does that make sense though, as to like why I got in right there?
Yeah, absolutely.
It's the same thing. I didn't get into Airbnb, but it's the same reason. I think I told you guys, I think on this day or on this day, I've been talking about Airbnb. If you would have bought it here or here, you would have made some good money. Diz didn't work out that well. It consolidated around the 200, but this is the one that went the other way. But I told you if it got below this mark right here, which was this low right here was 99.25. As soon as it did below that, I'm out. I don't like stocks that are making new lows or lower lows. That's a bad sign. I want stocks to be making higher lows and higher highs, not lower lows. So I would rather get out of this trade, get my capital back, and then put it into something that looks a little bit better. Like I've been looking at CAT. If CAT ever gets back down to here, which is why I have an alert. If CAT gets back down to 315, I'm looking at CAT. Look at this consolidation around the 200 moving day average. CAT is a big component, I think, of XLI. XLI has been consolidating too, right? Which is more in the Dow. The Dow has been bullish to neutral. So, like for me, I think CAT, especially if the Dow turns around, CAT could turn around too. And I just like it. So if we look at, so the high right here was 382. And let's say I wanted at 315. So let's go 315 divided by 382. It's almost 20% down from this high. Once again, that's a really good correction on a stock where if something drops 20%, most people who wanted to sell will have sold by then. If you just think about your own positions, generally, are you going to let something drop 20% on a long-term position? No, you probably would have gotten out by then, especially if you were trading it. Like if you were trading it with options or whatnot, you're probably long gone from this day of 382 all the way down here. So that's just what you're looking. I'm just looking for exhaustion. Are all the sellers gone? If all the sellers are gone, all we have left are buyers. And I want to be in it when all the buyers are coming back. And then if I'm in it when all the buyers are coming back and all the sellers are gone, there's a better chance that this is going to go up after it hits my point of entry. And if you're getting in on a discount, you have more room for it to wiggle. It's already exhausted. All of the major selling has already happened. So like you just have a better risk to reward ratio instead of buying it somewhere in the middle or one of these highs.
Absolutely.
Right. Anything else you want to look at before we end today? We're about 9:10.
Nah, we went through all of them pretty much. I like that. Let me see. Something right now.
Right. So just to recap, market sentiment. What is the index doing that stock or ETF is in? Is it up or down? What is the ETF, the main ETF, doing that stock or is tied to? Are we in a bull market or are we in a bear market? In a bull market, you should be more biased towards trades going up versus going down or selling things. What is the previous session close of that stock or ETF? If it's above the previous session close for a trade or a swing, the sentiment is likely going to be more to the upside. If it's below, it's going to be more to the downside. And then the last thing is, what's the trend, the current trend of the stock or the instrument? Is it trending upwards or is it trending downwards? If it's trending up, your sentiment, or it's likely going to have more follow through to the upside. If it's trending down, it's more likely going to be trending to the downside. For the longer term investments, ideally you want to see some period of consolidation on that particular stock to determine if that downside pressure is done, because we're always buying stocks in the long term at a discount, which means it's going to be on a pullback or when it's down. But ideally, if you see that consolidation, like we're seeing here on this screen with CAT, it went down, it went down, it went down, and now it's starting to consolidate, which is like indicative that it's kind of done heading downward. That's generally where I want to get in from a long-term perspective. But it would be better if we kind of zoom out, and over the last year or two, we did see that stock was heading mostly up. Even though it might be in a sideways pattern or recently kind of had this downward trend. But I like to see that it's near that 200 moving exponential moving average, because that's usually where a lot of stocks tend to turn around in a bull market. If we were in a bear market, that's where a lot of stocks tend to come down, is at the 200. So I would just flip this. Imagine if this was, we were mostly in a down market and this was coming up, I would probably be wanting to short it right here at the 200 to come back down if we were in a bear market. So it really just depends on where we are. But since everything has been going up, we're in a bull market, we're in a presidential year where things tend to go up, I'm going to be more biased to taking things bouncing off their 200 to the upside, especially if they have decent earnings, right? And just to go look at CAT, just to show you, I don't just use the stock price, especially for the longer term trades. I want to go look at like kind of where it is, right? CAT, it missed on the revenue, but not by much. Missed on the revenue the quarter before, but not by that much. But it's beating on the earnings per share. So it's a pretty solid company. Operating income is making $3.5 billion in cash every quarter. The revenue is huge. It's a little bit down, but it's a relatively safe company, and it also, when it gets close to that line, the red line is probably a good selling opportunity. Every time it gets close to that green line, it's a really good buying opportunity, because that's the range of the stock. And if you go back in history and look at it, if you would have sold every time it hit the red line and bought every time it hit the green line, you probably would have done really well. And then I also created an indicator that gives me arrows based upon the volume, whether or not something is overextended, and it kind of tells me like when to enter a trade. And it works even, well, I haven't really tried it yet, but it looks like it works even better on the 5-minute chart for day trades, because it gives you more signals. Like look at these right here. If you enter at the green arrows and get out at the red arrow, or short at the red arrow and then get out at the green arrow, right? Would you have made money?
That's called the what?
I just created this indicator. It's the Mocamas indicator.
Okay.
So
That time, do for the E-Trade one too, so you can see. Let me know how to put that one in there, because you chat GPT thing of that.
I created an indicator called exhaustion and one called the Mo ATR, and I had ChatGPT write these for me. But essentially, the exhaustion one takes a few readings from like the RSI, volume, like if more volume is coming in at that time. And essentially, I had it put green arrows at places where I should get in, and red arrows where I should get out, and or where I should short it. And if you just go look back a few days, if you would have followed this, you may have lost a couple of times, depending on kind of how you place your stops and whatnot. But also another indicator for me to determine whether or not this is a better trade is, did the red arrow happen when we were above the true range? If it's at the true range and it's a red arrow, then it's more likely going to be successful because it's already exhausted if it hits past this red line. So, and this is kind of how I've been trading anyway. I just made it to where it kind of gives me entry points, you know? Even right here, you would have shorted it right here. You could have shorted it down here, and then if you would have moved to break even, and maybe you would have got stopped out here, and then you could have got back in right there. If you had like a 25% stop loss on some options, you could have held on to this all the way until it got here, and then when that green arrow hits, get out. Right?
Yeah, nice.
Even here, if you would have got it down here, but then once it, I just know how I trade. If I would have saw this, if I would have entered here and came down all the way to here, I would have been at break even already. I just know how I trade. And likely I wouldn't have been trading right here because I usually trade within the first hour. So I probably would have traded one of these or one of these, you know. So I just kind of made my own indicator, and I'll just show you the trade that I got in on Friday at the close of market. I got in the Qs right here. And this is before I created these indicators, but I just saw that this was exhausted on Friday. I got into the Qs right here on Friday, and my indicator post is telling me that that was a good place to get in. I also got into Amazon on Friday for a swing position right here. I bought a position, and I bought a second position right there. And my indicator is telling me that that was a good place to enter. This was after the fact, but this is showing me, I'm like, hey, I think I may have found a decent indicator to start using, and it's all based upon exhaustion and volume, right? Has all of the selling gone? Is the RSI level at a really low level, which is a good time usually to buy? And as you see it here, it was at 20 when I bought my first position, and my second position right here, it was really low. So, and then that's why I was saying, what were we looking at? I should have bought Google again. I didn't buy Google because I'm already in a long leap on Google. But look, same thing. Look what my indicator said on Google on Friday. Is that these would have been good places to buy Google. It looks exhausted. Right? Does that make sense? Yeah. So I think the next session I'm gonna kind of like show you how I'm creating my own indicators using ChatGPT. And then for this, like, because even this, so it didn't have a red arrow, but look how close it is to this ATR that I have that says sell it if it gets here. So if it gets close to this and I see a little wick, this would have been a great place for me to sell based upon this indicator that I have. Because the average true range is like how much the stock price is likely going to move either up or down that day. Here's the high range, here's the low range. So if it gets to the high, this is a good place to short. If it gets to the low, this is a good place to buy. And look, even in after hours, that was a great place to sell, right? So instead of me, what I was doing before was, okay, something is showing signals, and then let me go calculate the average true range. I had ChatGPT make an indicator for me, so anything that I look at, it's automatically going to put it on the chart for me. And look at this right here. That would have been a great time to short it. So, and then combining these two indicators at the same time, if I would have shorted it right here, I would have made really good money on this. And then I wouldn't have sold until I got that green arrow. At least my entire position. I probably would have got out half my position. But right here, that's when I want to, that would have been a good indicator to sell right there. So trading between the arrows. So here, buy here, sell here, buy here. And if I would have followed the indicator, I would have made a ton of money on both of these trades here. Even this one, if I would have got in here, my stop loss may not have been triggered by the time this started coming up, if I would have gotten a little early. But generally, I'm looking for things that are further away from these moving averages. The further away they are from these moving averages, the more exhausted they are. Like this one is way far away from any of these, right? The further away, the more exhausted. So that's it for today. We'll be back next Sunday, same time, 8 o'clock. Mo commas. Making it rain without the umbrella.
Thank you.
All right.
All right, good game, man. Appreciate you.
All right.
Also, hey, when you get a chance, did you get my message about the I know how you be getting the how you were able to do the images for those books.
I don't know if I got that or if I looked at it.
Okay, when you get a chance, yeah, just check out that message and see if you, whenever you got time. No rush on that either.
Okay, for sure. I'll talk to you next week.
Appreciate it.
All
All
right.
right.
All right. Peace.